Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about the impact of events, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find the coach's education platform. Enjoy guys.
Hey, Coach, I'm trying to understand, in anticipation of a report or some big event, volatility rises. But why or how percentage-wise volatility crush? How often does that occur after a big event? The volatility
Well,
crush.
even during relatively small events like today, we had with my NASDAQ trade as an example. Let me show you. So when I paid for that trade, it was kind of like here, right? And it rose in 2 hours to about here. I took the trade off because it had moved over to here, but I did have an opportunity to get it here. So in that 2 hours, it rose about this much. And that was accelerated. Had we not had reports, it probably would have risen about this much. And the break evens wouldn't have been as wide. So in other words, break evens would be here and here instead of here and here. So I would have had less profit and closer break evens, less room to take that profit. Is that answering your question, Jerry?
I get part of it, but what in anticipation of an event and the volatility is rising, when are the circumstances when the crush it's not a crush and it goes up?
Well, I'm looking for a couple of things. I'm looking for the event itself and then the reflection of that event, the market's anticipation of that event in the pricing. The pricing basically tells you everything. In other words, the cost. So this is the trade that I put on this morning. What enticed me to that was the price here, the cost of this trade from here to here. The lower that is, the more potential there is in the trade. Now, I also looked at the E-mini S&P big ass fly, but its cost was above a certain amount. So it wasn't giving me the same kind of potential. So I went into the NASDAQ. So I'm looking for like standards. On the ES, I say debit of 25 or less. On this guy, on the NASDAQ, I'm saying $60 or less, right? And then it's good. That's telling me that the market is pricing in volatility. And so I put it on in the morning. I knew that at 9 o'clock, there was going to be economic reports and then another round at 10. So in this case, it produced maybe two potential volatility crushes, but this one was small and this one was bigger because of the nature of the reports. And so I ended up taking it off right after this one. So during those reports, after those reports were released, the anticipated volatility was gone because it's no longer anticipated. And then the premium decay accelerated. And so therefore this value of the fly went up fast.
Where is the best place to be? At the money before these reports?
Oh yeah, best place to be is at the money, but of course the market's moving back and forth. In fact, when I got out, I was right here. But because of that fast increase, the break evens were still outside and there was still plenty of profit there. Now, the only reason why I got out, to tell you the truth, was because I was in a meeting with somebody and I couldn't watch it. And I had to say, excuse me for 1 second, just need to take this off before we continue our meeting. So I did that.
Oh, this was just the other day with me, wasn't it?
Well, this is today too.
Oh, okay. Yeah, there you go.
Yeah. So the answer is yes, it was with you as well. Because, you know, my meetings go from 9 to like 11 or 9 to 10:30 for those meet the coach meetings. And so it's the prime time for me to take that off.
Are they break even when you're looking at the graph? I guess this is what I got to learn, because this morning I entered into the BAFs on both the ES and the NASDAQ, but I didn't know my break even. So basically, I'm just really winging it.
You can see them. It's wherever the real-time curve is intersecting the zero line. And you see these little red notches. That's your break even.
Okay, so yeah, that'll show up on the graph, you're saying.
Right there. Now,
Okay.
When I got out, it was a little closer in. It was like right here and here. And then the curve kind of looked like this when I got out, because that was 2 hours ago. As the day wears on and this keeps on rising, these break evens move out this way and this way. There's a limit to how far they'll go. They won't keep on going. They'll probably stop right around here and then eventually move back in, because eventually the break even is right where this blue line is crossing the zero. They can overshoot and then come back while this thing is growing. But this morning I was waiting for this initial move from here to here. And I knew that the break evens were going to widen. When I first put in my trade, the break evens were nothing. They were like here and here. And then they slowly widened as this grew.
I heard you mention before that they'll widen. When do they widen, or why do they widen, the break even?
Well, they're widening because the profit curve is coming above the zero line. So like if I'm right here and here's the profit curve at the zero line, there's no crossing of the zero line. So there's no break evens. There's just one right here. And then as it decays, now the break evens are right here. And then if it decays a little bit more, now the break evens are right here.
Thanks, Coach.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.